Hi everyone, welcome to another episode of the Mizuho Week Ahead. I am Ziyi, market economist at Mizuho Bank. The theme for the upcoming week is differentiated calculus. A slew of central bank decisions last week affirmed that the imminent or already started global easing cycle would not be a synchronized one. Instead, it will be subjected to differentiated calculus of growth, inflation, and currency stability. S&P proceeded with their second 25 basis points cut on waning underlying inflationary pressures and declining risks of second-round effects. With inflation outlook downgraded, a weaker Swiss franc could support prices. In contrast, Norges Bank left benchmark interest rate at 4.50% on above target inflation, remarking that it will probably need to hold rates at current levels for the rest of the year with its upgraded inflation and growth outlook. The Bank of England was in the middle of the cut hike spectrum, standing pat in a 7-hole to 2-cut vote. The decision to hold rates was finely balanced for some, suggesting that the odds could possibly tilt in favor of a cut in coming months. While latest inflation print in May touched Bank of England's 2% target, Bank of England noted upside risk to inflation, citing a still tight labour market, spillovers from higher minimum wage, and second-round effects from services inflation. Over in Asia, PBOC announced a planned shift to a single short-term rate and CGB trading. The former could amplify signaling capabilities while improve policy transmission mechanism, while the latter poses QE-related risks despite potential to lower risk and liquidity premium. Down under, the RBA left the cash rate target at 4.35% as expected. The statement noted that the above target inflation is proving to be persistent amid continued excess demand. Accordingly, the board discussed the case for a hike but not a cut. Nonetheless, RBA Governor Bullock pushed back against hawkish interpretations of the statement, noting that being vigilant to upside risk to inflation was not a signal for a rate hike. Notwithstanding this, Aussie dollar outperformed other Asian currencies. Meanwhile, Bank Indonesia stood pat despite the recent sell-off in rupiah, sparked by concerns over fiscal prudence on a possible increase in government debt trajectory. While acknowledging pressure on the rupiah, BI remarked that recent rupiah moves were more influenced by sentiment and perceptions, and reiterated that it will intervene into markets as necessary. The rupiah weakened following allusions that there were room for rate cuts should fiscal concerns fade. This week, BSP is expected to stand pat amid still elevated inflation. However, BSP could tone down on its rate cuts plans to provide some support for the peso on fears of cost-push inflation via the import channel. Allusions to a cut as early as August at the May meeting previously had seen a sell-off in the peso. Elsewhere, Vietnam's Q2 GDP is expected to improve to around 5.9% on resilient industrial production and as domestic demand holds up. However, the moderate nature of growth is unlikely to restore economy-wide confidence following the banking real estate developer scandals. Notably, escalating gold prices suggest that investors may be fleeing for safety. Meanwhile, inflation for June is expected to cross the SBV's upper limit of 4.5%, and a weak Vietnamese dong will keep the possibility of a SBV hike alive this week. With that, we have come to the end of the video. For more information on the key events for the upcoming week, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you and bye-bye.